You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market, from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tues from RCM Asset Management, Andrew the Rock Lobster Joe Vanazzi from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. And now, get ready to hit the option block.
All right, everybody. That rockin' tune means it's time to rock out what is hopefully your favorite option show, or at very least your favorite bi-weekly option show. It's time for the option block. My name is Mark Longo from theoptionsinsider.com by way of the aforementioned network. No shortage of ways for you guys to get all of our stuff. Again, the deep dive, the hardcores. Head on over to the website or the app. You can get your pick of the litter. Everything's there. 11 years now worth of content. So we got you covered. If you want to just have it delivered on your own schedule, you don't want to worry about it. iTunes, TuneIn, Stitcher, so on and so forth. Search for the full network if you want everything, or search for the name of your show of choice. It's all up there. About a dozen or so shows up there now for your listening pleasure. And of course, if you want to get it live, maybe you want to chime in during the show while it's being recorded. You can also do that after the fact. You send us emails stuff too, but you never know when those will be rotated in. Well, we do try to filter up the live guys. So if you want to hit the live stream, listen there, see how the sausage is made, then Mixler.com every Monday and Thursday, 3 p.m. Central, 4 p.m. Eastern for this show. And then you got your Twifos and your Vol Views on Friday. We had a couple fun live surprise guests in the studio this week as well. So you should probably follow us on Mixler if you're not doing so already, because you never know when we're going to go live with something fun that maybe you want to listen to, maybe you want to chime in on, ask your own questions. It's always fun. So stay tuned to that Mixler. A lot of people enjoyed what we had going out there for some surprises this week. So stay tuned there. You never know what you're going to get. Speaking of the panel, we don't know who we're going to get here. Let's spin the old all-star wheel, see what we got. Starting off first in the newly rechristened St. Charles Wealth Management in the aforementioned St. Charles. We are joined by Uncle Mike Tues from, I almost said RCM, from still with RCM, but now rechristened St. Charles Wealth Advisors. Uncle Mike, welcome back to the show, sir.
Happy to be here as always. Exciting day in the market today.
Yeah, some stuff actually happened. We shall get to that too. And also joining us a little farther from home, we have the man himself, the Rock Lobster, a.k.a. the man who hangs out in the hinterlands of Maine, Mr. Andrew Giovinazzi from the old OP, the optionpit.com. Mr. G, welcome back to the show, sir.
Well, it's good to be here on a sunny, beautiful day here in scenic Maine.
What's it, 52 in Maine? What's a scenic sunny day in Maine these days?
It's like 75, and
Crazy.
The water's kind of warm, and it's very, very, very pleasant.
The snow has melted. The ice rink is melted. What do you people do with yourselves when there's no snow and ice up there, sir? You got to be very sad. Very sad time up there.
You roll the tarp up on your rink. That's what you do.
There you go. There you go. You roll up the tarp, and we're going to roll up the old tarp and get rolling right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, welcome to the Trading Block. This is, of course, the portion of the program where we break down what was trading, what was moving, what was shaking, what was catching our eye. As Uncle Mike alluded to, a little bit of stuff happening. The indexes on the end of the day just came in at the close. It wasn't an exciting story. Most of the major indices off slightly on the day, about 0.25%, a little bit less on the S&P, a little bit less than that on the Qs, a little bit more than that on the Dow. VIX cash up ever so slightly, about 0.1% of a handle there. But that kind of belies what we saw throughout the day, a little bit more of a mixed bag. We saw a bit of a range out there in the S&P, about 26, 27 handles out there. So actually had a little bit of movement going on. People kind of digesting some of this trade news, the Korea news, the ongoing stuff coming out of the Trump Twitter account, everything all rolled into one, giving us a little bit of action today. Not a ton, but enough to grease the wheels a little bit out there. Again, out there in vol land, we had some interesting, it looks like it was going to be a little bit of a sell-off there. We saw VIX actually kind of spiking, got up to about 14.25. For all of you playing along in our poll, I'm sure that must have juiced the results a little bit. Then it gave it back up, got down to about 12.5, 1260 or so, settling out the end of the day, right around 1270 or so, just showing you can't keep some good vol up for long. It's got to come back down, and that it did end in the day. Well shy of the 13 handle. By the way, a lot of you guys already have. If you haven't done so, make sure you play along in our vote here. As people are tweeting and distracting me with their inappropriate hashtags here for the show. But yeah, looking here, just make sure you get your votes in. It expires. Actually, got a few more days to go. We changed it up this time. We didn't just say, hey, where's VIX going to close on Friday going into the holiday weekend? Because we do that a lot. We thought we'd mix it up and say, where's it going to open on Monday? It has a new wrinkle to it. Will they crush the vol going into the weekend and then bid it back up? Will they get the weekend back and then some on Monday? Will something else happen? You never know. So play along at Options is a place to do just that. I won't reveal the results just yet because A, you guys have to still vote, and B, I want to quiz these guys on it a little bit later, so that would be spoilers. So we won't do that. Instead, we'll turn our attention to the hinterlands of Maine. Let's start there. Mr. Rock Lobster, what was going on, and what were the crazies trading? What were you keeping an eye on today over there in Pitland?
We spent the morning watching vol go up, and I think everybody in our chat room watched just this vol spike, and I guess it was because Trump pulled out of the North Korea agreement or something, and vol spiked. Everything looked like it was just kind of going to have a sleepy day after the Fed, and everything just went kaboom. It was really weird. So, and then vol got bid up a little bit, and I added a couple of short vol puts, but other than that, and that was it. And then they spend the rest of the day kind of backtracking the whole Kim. It's getting kind of predictable a little bit sometimes on these, let's just call them news events. The second thing was at the end of the day, somebody just told me that Netflix has passed Disney in market cap, which I find quite astounding, actually.
Let us check.
So that's, as far as a big day, I mean, that's all I got, really.
That's what you got. Looking here. I got cash flow for share. I'm trying to get Netflix, of course, ending the day up nearly around the 350 handle at about market cap 140, about 150 billion with a B there, Mr. Rock Lobster. Meanwhile, Disney, the mecca, the conglomerate of all things entertainment, 153. So looks like Disney still has them. Of course, Disney. I don't know if you were betting on the future of that of those two, Mr. Rock Lobster, which one do you think is going to be in for the long haul, especially with Disney going to come out with what they're calling Disneyflix coming out in like a year or so? Which of those two would you be leaning on, you think?
I still this is the worst part of this trade. I would lean on Disney, but I don't think I could do like a Disney Netflix pair. I think it would be a dangerous pair just because the Netflix growth is just kind of unstoppable. I think they've found some sort of sweet spot of they produce their own content and they distribute it direct to the consumer, and it's kind of let's just call it kind of R-rated fare. Where a kid would be like R-rated movie fare on TV, and they somehow have figured out that this is going to work, and they seem to sell a lot of it.
They do. Just so you think everyone on the planet already has a Netflix account, right? And has it on multiple devices. They somehow add subscribers every quarter. So I'm not short selling them by any means. But still, it is kind of interesting to see that Disney is this leviathan that is lurking on the horizon. They have the cash to spend on getting content. You know, we all know Netflix, they generate a lot of revenue. They don't make a lot of money. They eat a lot of that up in all these content deals that they're doing. So people who own the content, maybe that's a better, who knows? Let's say. I'm not going to advocate for one or the other. Of course, it would also be interesting to see if Disney does get the Fox deal or not. That will certainly impact that. Comcast kind of emerging to rival them in that now. So maybe Disney, not perhaps the juggernaut everyone thought they were going to be. Of course, the albatross that is ESPN lurking out there. A lot of things, a lot of question marks out there. So there is an argument to be made for both. I kind of just wanted, maybe you guys have some thoughts on that. I think I know how I lean, but I'd be curious to hear how you guys lean, because I don't want to color the conversation here. Instead, let's turn on to Uncle Mike, he of St. Charles Wealth Management. Sir, does the Strategic Knight have any stake in the Disney Netflix fight? And what else was catching your eye out there these days?
Well, in terms of the Disney Netflix, say that 10 times real fast. I don't think I'm able to do such a thing. In terms of the Disney Netflix fight, Strategic Knight does hold Disney within our various products or our various holdings. We do own Disney, and with Netflix, we also own that. So we like them both, so to speak. But what I'll say personally is I think I'm one of the few people on earth that actually got rid of their Netflix account. I actually never used it. So I'm like, well, no reason for me to pay $10 for something like this that I never used. So I guess what frustrated me out of it was that if I was looking for something, there was oftentimes Netflix maybe wouldn't have it, or a movie for the kids or something like that. And then we end up paying like $4 on Amazon for it or whatever it is. And we end up getting it that way on the Amazon Prime thing, which is still very convenient, but that's just the way with which it went down in the Tues house. So I personally would bet on Disney if I had to bet on between the two of them. I think Disney has a much longer track record. I think that you combine that with the fact that I think I was reading somewhere that they're going to announce their new Star Wars theme parks. For those people that like Star Wars, that's something that I think is going to be really big. And if there's any company that can make Star Wars into something that's actually bigger than it already was before, I think it is Disney. So me personally, between the two of those companies, over the long haul, I would bet on Disney. But in the next 3 to 4 years, I'd probably bet on Netflix, just because that's like the more cool thing, so to speak. And it's creating a lot more excitement. And who can argue with things by any means? Now, in terms of the markets of what was happening today, early in the morning, it looked like we were going to, looked like things could go either way. But then there was the announcement, the White House announced that in the letter that Trump was not going to meet with North Korea. And so when that happened, it was just almost an instant drop in the marketplace in the early part of the day. However, the bulls did prevail throughout the day in comparison to the lows. The markets did end up slightly down on the day, but very well off the lows. So I'm pretty excited whenever I see things like that as a bull, because it's one where when we do have a sell-off and the bulls come in, to me, that's a sign of strength in the marketplace. So that's something that is pretty exciting to me. Now, in terms of what was actually down on the day, we have energy down. Of the sectors, energy is down 1.6% on the day. That's the biggest loss of the day that we have. So that's one thing that's dragging the markets down. But let's face it, energy has been going up like gangbusters lately. It has to have a pullback at some time. And we have financials that are down roughly 0.8%. And everything else is either is down much less than that, flat, or even up for that matter. So the fact that we have those two pretty big sectors not looking so hot today, and the rest of the market is doing okay, that's something that I think is pretty exciting as a bull. But what the heck? I see one buy order throughout the day, and I get excited about anything. So let's just be honest with ourselves. But that is what I was seeing on the markets today.
Uncle Mike, so you're the guy. You're the one guy who canceled Netflix. Whenever we see their earnings call, there's, they have all these millions of new subscribers, and then one guy dropped off, and it was you, Uncle Mike. So congratulations. You're the guy who canceled it. Whenever I have those thoughts, there's always enough there to keep us going, and kids' movies or whatever. Kids seem to be definitely but I'm with you. Sometimes the newest thing that they want isn't on there yet, and so you have to scramble a little bit, and you're saying, why am I paying for this? I already have Netflix. But still, there's enough there to keep you, and they know that. That's why they double down on the kids' stuff at the end of the day. Let's look out, see what else is popping off here after the bell. Earnings season kind of winding down, but still some names you guys like to trade. We talked, what was it? It was AMAT, I believe, earlier. We also have Best Buy coming out this morning. They kind of reaffirmed their guidance. But the street not liking that. I think they were hoping for maybe a little bit of a surprise upward. They took it on the chin today, off about 6.5%, about $5, trading right around $71, lighting it up from an options perspective about 8x their normal volume. They normally average about 9,000 contracts a day, doing about 75,000 today. Pretty even actually, calls over puts, so that's kind of interesting. No clear bias out there, but folks out there, for a while there, it seemed like they were maybe shrugging off the yoke of Amazon. Had done some cool things in their stores, having little kiosks, little kind of mini stores within stores and demo areas for VR, and giving you a reason to come in the store. It seemed like that was working. Maybe all of that, not so much. Maybe the great specter, Leviathan of Amazon is lurking in their rearview mirror yet again. Certainly seems like the street not liking what they saw today, because taking it on the chin. Also got GPS. Not Garmin. No, this is Gap. Gap coming out after the bell. I just love that ticker, GPS, because it's not what you think of when you think of ladies' fashion and pants and whatnot. But c'est la vie. Gap coming out after the bell. They closed today right around $33, up about $1, so about 3%. So a good day, intraday for Gap, kind of bucking the trend in the broad market. They were pricing in right around $2.50 or so, right around maybe a little bit shy of 8%. And looks like so far in the after hours, that seems light. They're off about $3.50 in the after hours, about 10.5%. So perhaps things looking a little bit dire out there in Gap land as we keep going here. So you should be hearing that in the chat. Looks like there was a little bit of a broadcast issue. Think we got that sorted out. Sorry about that. These things happen in live broadcast, even though for us it's first. I think it's first in 11 odd years that just about everything decided to go kaput simultaneously, even though I could still hear the Rock Lobster and Uncle Mike talking all this smack about me, which was unacceptable. But we'll have to keep on rolling for now, because it is beyond time for the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, welcome to the Odd Block. This is indeed the portion of the show we break down weird, wild, wonderful, wondrous, head-scratching paper that is lighting it up. We always like talking about our old friend, the old Teslas. And interesting stuff today. We did a little bit of our digging. We like to see what's going on out there in Tesla land. And if I could pull it up for me, there we go. Then I could see it for myself. Here, again, you guys can all do this digging for yourself. Head on over to tradealert.com. They have all that. That's probably the easiest place to do it. You can compile it yourself and other sources, but it's easiest. It's all done for you right there in Trade Alert. Mr. Rock Lobster, since you were talking all this mess about me trading stupids, you thought I couldn't hear you, but I could. I'm going to make you guess. What do you think? We know the number one top Tesla options position is. It's our old friend, the Jan 2019 50 puts, with a whopping 57,000 open on that strike now. So let's go a little bit above. Let's go a little bit beyond. See if you can guess the number 4 Tesla options position, sir. Go.
Oh my gosh. The January 2020 75 put.
Interesting. Not a bad guess. A lot of puts in the top 5 there. In order, listeners, it is the Jan 2019 50 put, which are far and away number 1, 57,000 open there. Number 2, the Jan par puts, the Jan 2019 par puts, about 25,000 contracts open right now. Then we go on to number 3. Just put this out for the masses who are listening who may have lost the thread there. There we go. Let them know we're talking options here in Tesla. There we go. Number 3, the Jan 200. 200 puts, Mr. Rock Lobster. 18,000, about 19,000 open. Number 4, what I asked you about, probably not what you'd expect. That's why I asked you this one, Mr. Rock Lobster. They are the Jan 2019. So you were right in Jan, off by about a year. And the other side of the coin, instead of the 75 puts, 600 calls.
Wow.
So someone, there still are Tesla bulls out there and some hardcore ones. So the stock's got to do where we close today. Oh, yeah, it's got to more than double by Jan of next year. If I had to pick the puts or the calls, I don't know. That's a hard one over there. Both equally redonkulous, especially by January. But say la vie, round out the top 5, the Jan 2019 150 puts. We got that right up on the site. You can find that for yourselves, listeners, if you want to see exactly what all this craziness is. Speaking of craziness, let's get to some of these odd block shenanigans we got going on over here. Kind of a weird one to kick things off, Mr. Rock Lobster. And good old PBR, not Pabst Blue Ribbon. That would be pretty cool. It's Petroleo Brasil, Petrobras. It's an ADR, of course, ticker symbol. Like I mentioned, PBR closing today, $12.78 off about $2.33, about 15%. Not a great day for PBR. About 37,000 contracts a day. This name averages doing about 260 almost today. So a lot of action, a lot of stuff across the board, Mr. Rock Lobster. One thing that came across our radar, though, was kind of interesting after this big sell-off today. Someone coming in and deciding to do what looks like a pretty long-term, not that wide, decently wide, but not super wide, strangle. It was a Jan 2020 1017 strangle, going up pretty much almost exactly mid-market, which of course means it's oh so fun for the analysis. Let's see if we can pull up these strikes here as we're talking to kind of see for ourselves. Yeah. I'm gonna lean sell just for fun here. The Jan 2020 10 puts going up for $1.04, 5,000 times. The Jan 2020 17 calls going up $1.68, 5,000 times as well. It's doing the whole thing for $2.72. So you're pretty much strangling, if you are indeed selling that, you're strangling Petrobras between the 10 and 17 handle. Obviously, you got almost $3 worth of distance out there. So you're pretty much effectively between the 7 and the 20 handle for the next year and a half or so. Interesting. Let's see how the chart matches up here to what our friend is up to. At least let's go a little bit longer term. Let's go 2 years this time just to see how this strangle is setting up. Usually like to go 1 year. 2 years ago, Petrobras was about $6. So less than half of what it is today, even after today's sell-off. Not so much with the, still had a lot more to go. Over the past year, it was about $9 about a year ago, and then it's got as high recently as about 17.20 actually it hit, so just about a week of change ago, and then kind of coming off hard today as a result. Mr. Rock Lobster, are you a fan of long-term strangles in general? I think I know how you're going to vote, but let's put it out there anyway for the listeners. And then B, what do you think in particular of this one? And are you feeling sale, or do you think someone is feeling super optimistic and bought this bad boy?
You know, this is one I traded this a while for a bit, but it was below 10, and it's showing a lot of vol for what it should be happening. I think somebody's just I think anyway, it feels like somebody's just kind of whacking this out, selling it just because it's a pretty huge pop in vol today. I mean, it was a $2 move. You'd think somebody's just kind of taking some money here and saying, you know what? I don't think PBR, which is what the national oil company of Brazil, you know, I don't think it's going out of business, but everybody thought it was going out of business a while ago. But it does feel like kind of a grande premium sale to me. It's sort of what it feels like. Maybe premium sale versus stock, if possible. It is showing a lot of tied to stock. So that's kind of where I think my head's lying on that one. a little bit of premium versus stock. I can see on the Jan 2019 that they could potentially be buying. That could be a more of a buy, like puts in stock trade, and then possibly financing it by selling that 1710. I see how that is possible. Why you would go to all that trouble to lock the trade up like that, I have absolutely no idea, but yet somebody did it. I can see selling like the 10 puts in here or something like that this year, but the strangle looks a little. The strangle almost looks like it goes with the 13s, and that just to me makes it like an odd looking trade. I got to be honest with you. It's one of those. It's a little head scratchery for me.
That's what's fun about the odd block. Always scratching our heads out here. Let's keep the head scratching going out here with another sizable and mid-market execution here, as you expect from the size prints. They can't make it easy for you. Out here in EMB, this is the JPMorgan US Dollar Emerging Market Bond Fund ETF. Say that one 5 times fast. Closing today 109.35, up about 1/3% or so. Averaging about almost 9,000 contracts a day. Today doing 99,000, so a little bit more than normal. And the big trade coming of that 99,000 looks like 96,000 coming in this one mega. I'm going to call it a bullish risk reversal. Maybe Mr. Rock Lobster will have a different interpretation. It was the September 103 puts going up for 80 cents, right around, about a nickel off the bid. So those look like someone's blasting out those, which is usually the starting point, the setup point for a nice bullish risk reversal. Then they're turning around, picking themselves up. Looks like, at least, it is kind of a lower execution, so maybe they got a savvy. I'm gonna chalk this up to a savvy execution. They got a good price on these of 106 for the SEP 110 calls, 32,000 of those as well. Then also rounding it out, 32,000 of SEP 113s for a nice whopping nickel right on the bid. So they definitely did not buy those unless they got the best broker on the planet. At least part of this spread anyway. Outright maybe is a different story. But still, I know Mr. Rock Lobster is not going to like that sale at all. But still, so doing the call spread for pretty much $1 and then turning around and blasting out the puts for 80 cents. So doing the whole thing for, 21 cents net on the spread. Well, let's look here. If it is indeed a bullish risk reversal, I'm feeling that it is, because selling a strangle on the, or should say it's stupid on the upside, despite what those guys were saying about me earlier. I'm not a fan of that. So doing just a straight up stupid, let alone a stupid leg for a nickel, would be very strange if it wasn't indeed a spread. And a year ago, EMB was, about 115.5, so a little bit north of where it is now. This thing got up to as high as about 117, so it's not rock'em sock'em robots, but of late it's been on a tier to the downside, going down to about 107 and change, kind of hovering near that near-term trough right now. Mr. Rock Lobster, looking at this chart, seems like someone may be thinking this thing's due for a little bit of a comeback to the upside, not afraid to get their hands dirty down the 103 strike if the negative, the bad side, the dark side should come to pass. Are you feeling this as well, or do you think this is something even funkier, like a stupid with puts, or what's your spidey sense telling you?
I think somebody is looking at the fact that the rate rises are going to be a little less. They telegraphed a little less. The EMB has gotten smacked this year, and they're just jumping in with the risk reversal, looking for a home run ski on this. So that's what it. If I'm just straight up reading what's going on, I feel like that's kind of what happened. Somebody's just getting long these things and see if they can turn it into a big home run. Why you'd bother selling the 113s for nickel, I don't know, but yet they did. They did.
And I knew you would love that part. I know that the inherent risk manager in you is just saying, tisk, tisk. Why, yeah, for a nickel, you're giving up all of that juicy upside, right? So, I don't know. If you're going to go to all this trouble to do 96,000 contracts, maybe give yourself a little bit of room to run. Why take that nickel? But c'est la vie. A conversation for another day. Let's keep on rolling. We want to get some of you guys here on the show as well. We've already been delayed by these guys talking stupids nonstop here on the show. Let's blame them, listeners. It sounds good. All right, so keep on rolling to our final name. This is Deutsche Bank, ticker symbol DB. Of course, not having the best of day, closing today around 12 1/4, off about 5%. They had some headlines this morning. They're going to slash 7,000 jobs, go through a big restructuring, warned of a bad second quarter. So a lot of bad things in combination there, all that leaning on the stock pretty hard. This is the name that does about 15, almost 16,000 contracts a day. Today doing about 61,000 out there. So pretty interesting. Also interesting is this paper, which is kind of funky. We saw 20,000 of the June, these are the weeklies because they're expiring on the 1st. So the June 1st, 12 and a half calls going up today for 9 cents. Right on the bid, 20,000 times. You look at that, you say, well, that's weird. Someone coming in, crushing the bid 20,000 times after the stock, they're looking to get a little bit of yield. You start digging a little bit more, you see there's actually 20,000 and change open on the strike. So then it starts thinking, perhaps this is a wee bit of closing activity. Someone perhaps bought some calls. Things didn't work out the way they thought. Giving up the ghost today, taking the 9 cents and running. Then it gets doubly weird because you see the paper that happened in these June 12 half calls wasn't opened 3 months ago or 3 weeks ago or even 3 days ago. It was opened yesterday. There's someone trading about 20,000 of these June 12 half calls, expiring on the 1st again for 44 cents yesterday. Right before this big announcement. They went up at the time, right in the mid-market, a little bit towards the offer, so it doesn't look like they were bought. The market was 41 at 47 at the time, went up for 44 cents, so kind of splitting the uprights right there. So it could have been an overwrite, but then they're doubling down today. That would be doubly weird as well. So it looks like someone perhaps thought they had the scoop on this news and then perhaps got maybe a little bit of a Texas hedge. They went the wrong way, or they just thought this was going to be more bullish news than they got. Either way, it does seem like someone perhaps got a bit run over here to the tune of about 35 cents or so here, 20,000 times. We don't need to look at the chart for this one because it's pretty much yesterday and today is all we're concerned with. Mr. Rock Lobster, do you have the same feel on this one? Someone maybe got a little bit too big for their britches, got in ahead, thought they had something good and juicy, and then, oh shucks, didn't work out?
I think, yeah, that was something we talked about yesterday in our pit report. Actually looked at kind of an interesting little diagonal spread on this, put diagonal spread. Kind of looking for DB to go down a little bit, down to sort of around 12-ish. And I think, yeah, so they thought, oh, wow, they're going to restructure and slash 10,000 jobs. And the stock should rally. And then everybody realizes, wow, they have to slash 10,000 jobs. So I think, and I remember Deutsche Bank having troubles a few years ago, 2 years ago maybe, caused a lot more consternation than it's having right now. But certainly a little sketchy. So I just think somebody kind of got run over, to be honest.
Yeah, leaving it nice if that's the case. About 700 grand on the table for their efforts. So someone perhaps thinking, yeah, because maybe I could see that. You hear restructuring, or not restructuring, but you hear layoffs. You think, oh, maybe stock's going to rally, right? Usually Wall Street is nothing if not Darwinian. They see people, expenses cut, stock rallies. And yet, obviously, the guidance was much more dire than that. And so it could be something as simple as that. Someone got the tip, and it turns out the tip was in the wrong direction, and they got run over. So there you go, listeners. Size money, not always the smart money. We say that all the time here on the show, and this proves it yet again. We'll keep an eye on this one. This should be investigated anyway for the timing. Even though it didn't work out, still someone probably, a little bit of information leakage probably going on there. Someone should probably take a check at that as we keep on rolling into the mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, everybody. Welcome to the Mail Block. You guys taking the reins here. Questions, comments, insights. We also ask you guys some questions every now and then. If I had my old Twitter machine up, then I could see exactly. There we go. That's where everything got rebooted and all that stupid melee there. You guys talking stupid. Just crashed the whole system. They couldn't handle it, the madness. But we asked you guys earlier this week, again, I mentioned at the top of the show, we're right now in VIX land, right about 12.5 here, and asking you guys, where do you think we'll be on Monday's open? Right around here, so in the 12 to 14 range. Give you a nice little wide range. Don't make it as hard for you as we do make it for ourselves on vol views where you have to be pinpoint accurate. You guys get a nice range, 2-handle range or so. Or a little bit higher, 14 to 16 range, lower in the 10.5 to 12 range, or much higher, aka greater than 16. Mr. Uncle Mike, we'll start with you, sir. What's your vote, and what do you think the audience is feeling?
12 to 14 on both answers.
Okay, staying with that nice healthy range. There we go. Mr. Rock Lobster, have you a wager, sir?
I have to say 12 to 14. I got to be boring, but I like to go counter to that. But if we can't get the Rocket Man Trump trade war thing going, I don't know what's going to get vol going. So 12 to 14 is looking like the number.
Certainly seems like if there was a day to break free from the range, today was that day. And we did not manage that. Yes, the audience is agreeing with you. 37% saying 12 to 14, 30% going a little bit higher, 14 to 16, and then pretty much a tie between lower, 10.5 to 12, and much higher, over 16, with about 16 to 17% for each of those. Last week we asked you guys which derivative you wanted in crypto next, and pretty much all of you, 76%, choosing Bitcoin options. No surprise there. Let's see. Charlotte asking us, hey, what about that move in WWE? Are you guys buying calls like crazy? This just goes to show how out of touch I was with wrestling in the modern era. I didn't even know they were public until about a couple of months ago. I saw some news about it, and I said, oh, wait a minute, they're public? And then sure enough, I was a little late to the party because this thing has been on a tear of late. In the last couple of months alone, pretty much nearly doubling. And since October of last year, it has more than doubled. Of course, they had the news that NBC was going to pay pretty much $1 billion for just one of the WWE shows for the next 5 years. So that just shows you how much money there is in the sports entertainment biz. And you're right. I wish, Charlotte, to answer your question, yeah, sure, I wish I had a couple of weeks ago because the stock was in the 30s. Oh, not that long ago. Oh, back in April, it was in the 30s, about a month ago. And already it is 58.78, closing up again today, nearly 3%. So I don't know, either you guys more fortunate than I to scoop up on a ton of WWE upside since in the recent months?
I wish it was, but one thing that you can't say, this move is definitely not fake.
Oh, look at you. How long have you been sitting on that one there, sir? Maybe our little...
Just thought of that one, actually.
Our little hiatus for the show here today probably did you some good. Let the juices flow there. A lot of people have got HMNY on the brain. Here we got a bunch of questions about this. So I'm going to get a couple of these in here because they're kind of similar. First up, Justin wants to know, I know you guys hate cheapy options. And yeah, we pretty much do, Justin. He goes on to write, but your comments about HMNY got me thinking. I could sell the June half straddle for about 25 cents. By the way, listeners, if you forgot or missed the shows earlier in the week, HMNY is Helios and Matheson Analytics. They are the parent company, effectively, of MoviePass. Have been on quite the tear of late, going from about $38 down to, as of today, 46 cents. So not the best run for any name. Justin saying he could sell the June half straddle for about 25 cents. If I could do that again in July, then in 2 months I could have the stock almost for free. A free stock is even better than a cheap stock. So I'm assuming he didn't mention, I'm assuming he wants to buy the stock and then sell that, effectively add the money straddle now for 25 cents. Similar comment here from LTTW saying the HMNY OG half straddle is currently around 25 to 30 cents. I agree that it makes no sense to buy that when the stock is 46 cents. But I'm liking selling this straddle to get the stock for 16 cents by August expiration. Maybe even work a penny to nickel bid for some dollar calls further out on a ratio in case the stock recovers aggressively. ? So everybody here, Mr. Rock Lobster and Uncle Mike, trying to find ways to get a super cheap stock even cheaper. which is, I guess that says something about our audience. They appreciate thrift. This is interesting. The first guy here, Justin, says he can sell that front month straddle for 25 cents. Maybe he must have wrote in a little bit earlier, because today that straddle is like 15-cent bid tops. And maybe if you're lucky, you can maybe get that for, you're not going to get that for 20 cents. You're going to get that for 15 cents. So I don't know how you're getting 25 cents. I'm looking here right now. Our other guy here, LTTW, is more correct. He says the AUG half straddle is about 25 cents. So maybe if you get a good execute, maybe you can get up to 30 cents on that one. Still, that's AUG. That's about 90 days away. So you're going to tie up, you're going to buy a $0.50 stock to tie up and then wait, hope it sits for 90 days. And then you got half of it for free. I don't know. Mr. Uncle Mike, Mr. Rock Lobster, are either of these options, quote unquote, intriguing to you, or are you guys just done with these cheapy names?
No, it's one where if you think you can do it, great, but that's a whole lot of stress going on for a stock that cheap, and it's a whole lot of commissions going to your broker if you're trading it with any size. So I would take a pass on this one.
Yeah, you're going to do some size if it's a 46-cent stock. Mr. Rock Lobster, what if one of your clients came to you with these scenarios? What would you say, sir?
It makes no sense, but I like selling the straddle. You sell the straddle, what if the stock blows up? How does that work?
That's what he's saying. See, he's savvy. He wants to work a nickel bid for some dollar calls in case it blows up, right?
I guess so. Why bother selling the straddle? Just sell. I'm going to say sometimes things sound really great. And now, they don't work very well. So, do you guys remember, like, what is it, last year or 2 years ago when dry ships, there was that short squeeze and all the dry movers and I think crazy short squeezes? Yes, I'm going to agree with Tues on this one again. I don't need that kind of headache for a dime.
Yeah, I guess by the time you end up buying these calls on a ratio to the upside, you're down from your 25 odd cents, at least down to 20. So you have taken off somewhere close to half of the price of that stock. Yeah, and you got some calls on the upside. So I guess you got to do on the ratio. You're right, because otherwise it's just a vertical. So you got to buy more than you're selling. So yeah, keep that in mind, listeners. You got to buy 2x on the upside to have those net long units we're always talking about. But I guess clearly we lit a fire under some people for this HMNY here. Let's see if we can do one more quick one. Someone writing into the mail blick. I don't know what the heck the mail blick is. The mail block is this segment. This is Scott Sommer. Yeah, he's written in before. He should know better. He asks, when doing earnings trades, do you always default to nearest Friday expiration? I don't do a ton of earnings trades, quite frankly. We said this before. I kind of tend to eschew that kind of stuff. Come in after sometimes, which is kind of interesting. Things get really crushed. But yeah, in general, if I'm going to do something geared around the earnings, that's probably how I'm going to do it in the weekly expiring that thing. Unless I have something I want to take advantage of, some sort of vol crush afterwards. Then I'll go out, maybe a couple of weeks after or the week after or monthly. That's usually how I'll play. So I guess technically the answer would be no, because I'll do it afterwards. But if I was going to do something targeted at the earnings and say I want to spec on earnings, yeah, I probably would use the weekly. I can't think of another reason why I would use something else unless I was highly motivated. I don't know. You guys don't do a lot of earnings trades either, but if you were so inspired, would you go to the nearest Friday expiration? Scott wants to know.
Why not? If you're going to do it, you might as well do it. And since I don't do it, I might as well talk about doing it. Let's go to the near Friday. Let's buy some straddles.
There you go. Yes, just get long all the at the money premium you possibly can for that Friday expiration. In case you can't tell, he was joking, listeners. But yeah, that's what weeklies were kind of designed for. They were designed for specific event trading. They've kind of morphed into this premium harvesting extravaganza, but they were designed for this. So if you're using them in that capacity, you're actually technically using them how they were designed. So yes, I think that's pretty fair to say we all would. Why go a whole month if you only need that 1 week? All right, let's keep on rolling into our final segment. It is time for Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, welcome to Around the Block. This is indeed the portion of the show we tell you we're keeping an eye on for the rest of this week. We'll check in with our old buddy Gap here. Remember, they were popping off after the bell here today. They were pricing at the time we said they were selling off pretty hard. They're pricing in about 8%, which is right around 250, 260. And the after hours are pretty much right around that 250 level right now. So they were off over 10% a little bit earlier. Obviously, some of that sell-off bits a bit ameliorated now. Let's see, they got as low as, right there off about close to $3 at one point, and then they kind of rallied back, and they're kind of been, bouncing around in that range ever since. Let's turn back to the scenic shores of St. Charles Wealth Management. Mr. Uncle Mike, sir, what do you keep an eye on for the rest of this week into the weekend?
Well, we've never gotten through, we've never closed above the 274 mark for SPY, so definitely keeping an eye on that. Want to see if we can break through there. I think that is kind of a key level, and not knowing unless we get, I'm not expecting a lot of volume tomorrow, just kind of like it's the day before a 3-day weekend, so we'll see what happens, but maybe we can catch a little bit of a low volume rally tomorrow. We will see.
There you go. If it does rally, you can expect all that juicy ball that came in again today. Probably going to come in again because they don't like it going into these holiday weekends. And any excuse they have to start crushing, they probably will. And in fact, they already did today. Hence, VIX couldn't maintain any of that lift earlier in the day. Mr. Rock Lobster, same question for you, sir. What are you keeping an eye on for the rest of this week into the lengthened holiday weekend?
I'm looking to see if we get a little bounce in oil. I guess the dollar rally slowed down a little bit. So a bounce in that, looking for VIX to drop out of the 12 handle into next week, and see if, kind of like the rally could recommence. We're kind of sitting here not doing anything. All of the early year hype is dead. All the, now there's just there's a lot of noise going on, but not a lot of nothing happening, at least, although the bank reform was pretty good. So KRE looks good from that point of view. But for right now, that's about all. Just seeing what can happen. I'm looking at this Turkey thing because that ETF is interesting. Total non sequitur though, but it is because the lira is getting destroyed. So I thought it might be an interesting trade at some point. But other than that, that's about it. Kind of a slow week, I got to say.
Kind of the consequence of having a holiday weekend is that things tend to slow down towards the end of it. Hopefully get a little bit of action in the old markets. Don't forget, listeners, join us back tomorrow. Hopefully Uncle Mike and the Rock Lobster haven't messed things up completely so that we can do the shows tomorrow. I think we'll have it sorted out by then. Those guys, hitting buttons over there, causing all sorts of problems. Can't trust them around technology. Of course, Vol Views on Friday, noon Central, 1 p.m. Eastern. TWIFO, 1:30 p.m. Central, 2:30 p.m. Eastern. Check it out on Mixlr. If you can join us, we'd love to see you guys in there. And you guys can ask questions, all sorts of fun stuff, or hit us up on the podcast. By the way, no show on Monday, so unfortunately no OB. Maybe we'll get a nice little best of out there for you or something to keep you happy. But yeah, no OB hitting the network on Monday. We all have a day off. Let Uncle Mike and the Rock Lobster have a day off too. And myself. That would be nice. All right, before we go, let's go around the horn. Uncle Mike, we'll start with you. How are things in the newly christened St. Charles Wealth Management, sir?
Oh, very exciting. The night of May 31st at my office, 303 East Main in St. Charles, we are having an event where I'm going to be talking to folks about the simulated index concept. For more information on that, shoot me an email at mtosaw@stcharleswealth.com. And also, I'd like to just give out a shout out to our veterans and anyone who's served in a foreign war and those who aren't with us anymore. Let's honor them. Let's think about them this weekend and just be grateful for the country with which we live.
Well said, sir. Mr. Rock Lobster, while you're enjoying and doing your patriotic duty, what can we expect from the land of the pit?
We have VXX Made Easy going okay. It was one of our best-selling things. I think people like it. Vol Newsletter doing well, kind of just navigating all this madness. And look for more specials and goodies coming from Option Pit soon. So there's going to be more of this Made Easy series because people seem to like it.
Well, you got your next one already for you right here, right? HMNY Made Easy. I mean, the people are screaming for it. How do you make a 46-cent stock even easier? Go. That's your next mission.
Sell straddles. Oh, don't do that.
Straddles on a ratio with the calls on the upside. Nothing can go wrong, sir. Free stock, free money. Gotta get out there. Get your HMNY Made Easy webinar coming soon in the land of the pit, optionpit.com. On behalf of the Rock Lobster, who pshaws all of your straddle trades in HMNY, and indeed Uncle Mike of the newly christened St. Charles Wealth Management, and indeed myself. Thank all of you out there for downloading, streaming, and subscribing. Sorry about all those hiccups midstream. We'll make sure those are sorted out for next time, and we'll see you next time for more of the Option Block.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.